Welcome back to another video. Before we begin, none of this is financial advice. Please do your own due diligence and research. Last video, I showed the scenarios we are in. This video, I just want to do an update. As you've noticed, I cleaned up the layout to easier track things. One thing I will change is where wave 2 ends and where the smaller wave begins. Because this bump that we have here was an 88.6% retracement, which can only be seen in the hourly time frame. So I'll remove that and I'll bring this forward over here. And we will solely focus on the clear impulsive waves, as in what we did mostly in the previous video. First things first, what I was tracking played out perfectly. I did anticipate it going lower, as in this corrective move here. I did expect this to go lower to the 88.6% retracement because, remember, there was a gap right below the 78.6 and also a gap right here. So I was fully anticipating the price to come all the way back down into this 88.6 retracement level, but I am glad it stopped at this 61.8% level to a T, because this is the golden ratio, and because it stopped at a higher level, we can anticipate a higher level for the next wave. So what we have now, we can map out the next Fibonacci levels, which I do actually have here already. So this would be the wave 1 into the wave 2, and then we'd be going into a wave 3. And remember that in the grand scheme of things, these smaller waves will ultimately reach the higher degree wave price targets that we have laid out here and here and even here. Just keep that in mind, because what I'm tracking now is relatively smaller in relation to the moves back in January and in May 2024. As in January, the original run, and then what we had here in May. So in other words, it's all in fun until it's not. So first, I just want to jump into the 4-hour time frame and see what we have here. So going back to where this wave 2 terminated right here, again, we saw that this stopped right at this 61.8 level. We're ignoring this wick we have here because that didn't show up in on the daily frame. But we saw that it terminated right here, where we can start plotting this next move. And we've seen this kind of move quite a lot of times, to be honest. For those who have been watching since the beginning, we can clearly identify this as a leading diagonal, where it's a 1, 2, 3, 4, and 5, which again, if we find where it retraces to, it goes down to the 78.6% retracement level. And then of course, what comes after the leading diagonal is a very strong wave 3, which we have. And what we saw next from after this wave 2 terminated was, of course, a strong wave 3. So what I am expecting now is actually a wave 4 correction or consolidation, which of course is going to be either some kind of flat, right? Or maybe a triangle, or maybe a combination. And typically, in the wave 4, we won't see any deep retracement like we did for the second wave, for wave 2. What we see for wave 4 is actually sideways consolidation which will typically not surpass the 50% retracement level. So I'm not expecting any strong drawback or pullback, and you can even see on the MACD it's very red already, but the price is actually holding on pretty well. Additionally, I'm not expecting it to come all the way down here to 61.8 even though it's a golden ratio, because one, it would break the impulsive structure, because again, this is wave 1 termination. If it touches down to 61.8, it would almost very closely hit the wave 1 area. And also secondly, it is just not characteristic of a consolidative corrective move for wave 4. And of course, if you wanted to chart this out, this would be a 1, 2, 3 into a 4, because this would be a running flat into a 5 here. So this entire move that we have here is of course wave 3. So we would have a wave 1 starting from here, 1, which is again leading diagonal into a wave 2, into wave 3, into wave 4, which I am expecting it to correct here, and then wave 5 somewhere up here. Now back to the daily time frame. This is a little confusing, but we are in a wave 3 from 1, 2, 3, but we are in the first wave of the said wave 3. That means that if I'm correct, we will not reach this Fibonacci 1 level just yet. It will take time, but I don't see it coming here yet. However, the endpoint will be the same as the price target, will have to be met eventually. But basically what you see now is just a smaller degree wave 1, which is again incomplete. And of course, the higher the wave 1 termination and the higher the wave 2 termination, the higher the projected price action of the stock will be for the next coming wave. So what does that mean? I expect this to be a 1, 2, 3, 4, and then 5. Somewhere 1, 2, 3, 4, 5, something like that. I don't expect it to hit this just yet. I do expect it to be somewhere close to it, and then we will have some kind of corrective move, which I don't have it lined up. We will have some kind of corrective move like so, before we have another move up, like so. 5. And of course, if wave 1 terminates at a higher level, so if we had wave 1 terminating here, for instance, theoretically, if wave 1 terminated right here at 26.11, and then it retraced as wave 2 goes back down into, let's choose a level, 61.8. Let's say theoretically this were to happen. We can see that the next projected level, or next projected price action, or price target is 27.88 as a minimum for wave 3. But however, if wave 1 were to perhaps go higher, terminate higher, with the same retracement level of 61.8, we can see that everything gets shifted up because the wave 1 terminated at a higher level. So now wave 1, the Fibonacci extension 1 is now 29.99. Now similarly, if we had wave 1 terminating at the 26.11 like previously, and then On the flip side, we had wave 2 terminating at a much higher level, let's say 38.2. We can see that as we drag this Fibonacci extension level, we can see that wave 1 is now 28.97. So there is a relationship between wave 1 and wave 2, which will project where the next price target will be. Now, there are a few things to mention seeing the path ahead. We have overhead resistance over here at 1.618, which is the 3360, and we have these two previous highs which also act as overhead resistance. And then of course we have this 2 Fibonacci level extension, which is 3712. So we can easily terminate this move up anywhere from this 3360 to 3712. But that won't stop us from going higher. It will likely just be breathing room for us. Now, if you want to ignore all the noise, all you have to do is just go into the time frame, select 1 week, and now you have the weekly time frame. Everything becomes much clearer on the larger time frames. I've mentioned this before, but I feel like it is very important to re-emphasize just how important this is. Everything becomes very clear on a larger scale because it takes days for one bar to form. You essentially reduce and remove a lot of noise. If you take a look at this, you can clearly see how I had this Fibonacci extension, which was on the daily a 1, 2, 3, 4, 5, and then ABC. But on the weekly, all you see is just a 1 and then a 2. So you can clearly see there's a 1, 2, and we're heading into a third wave. And not only to mention that, all the indicators that I have here is very bullish. You can see on the weekly that we have a strong moving MACD and the RSI is slowly climbing up. Not only that, we are so close to this Ichimoku line. Now we just have to break through that cloud and we will be on our way. There is no stopping this. Now, I know that there are a few of you who probably saw the parabolic run on CAR, which is Avis Budget Group. This crazy parabolic, this is again back on the daily, this was an incredible 760% move for Avis in just 35 days. If you got in early, congrats. But I know many were shown this on their feed too little too late. And I want to show you something. If we go back into this move that we had here in March, we can just draw this Fibonacci extension because we have this local low into the next local low, which again, we can already see that it would be technically second wave, hitting exactly 65% retracement. Now, if we plot the Fibonacci extension giving this information, we can go from, of course, the low to high back to the second low. What you see here is that it hit this 1.618 level almost to a T, which again, the golden ratio is this 1.618, and it's very common for the third wave. I only got this notification when it was literally 1 day before this red. It only showed up in my feed right here. When I charted it out, I already knew it was game over. Because not only was it this 1.618, but if you take a look at the RSI, it was way over, deep into the overbought territory. And if you go back further, back into the 2020 run, which we had here, which of course, there's a lot of parallels from this to GameStop, which I will talk a bit more about. If we go from the low, from here, up here, to the high, of course, back into the low, the second low, we can see that this 0.618, $837 is extremely close to this 1.618 level, and arguably it actually did terminate right at this 0.618 level, stemming all the way from 2020. Of course, again, this 618 is a golden ratio, and for this being from the very strong move from 2020, this also poses a really strong termination point. In this case, both golden ratios were essentially hit, which was the massive resistance, and which essentially just topped this out. But this goes to show that any price target can be reached. It is the levels that truly matter. This here was at $54, and this ended up being a 1,425% move. From 2020, this actually started from $6.40 roughly. And again, the move ended up being 13,000%. But these are the Fibonacci levels that we should be focusing on. Not so much about the price of the stock itself, but the relationship between the wave 1 into a wave 2. Whether the stock is $20 or $500, the Fibonacci levels don't lie. There's no price that cannot be reached, especially with the bullish setup that we have on GameStop. And one thing I want to reiterate with GameStop, if we plot the same levels, which I have had since the very beginning, we can see, of course, first off, let me clean it up just a bit more. We can see from this April-May move, which you can compare it with CAR, this move from here down to wave 2 over here will bring us, with the 1.618 golden ratio, is $369. Now if we were to plot this move from the very beginning back in 2020 and then peaking to 2021, the 0.618 level would be here at 247. Now this is what I've been calling for since the very beginning, but we need to see more price action to have a better projection of the larger price target. For CAR, it just so happened that the 1.618 and the 0.618 aligned so perfectly well, which caused a huge amount of resistance. But again, before I end this video, we must be patient. The time will come for retribution. If you aren't patient, go to the weekly time frame and ignore all the noise. Ignore everything that's happening on a smaller time frame. In fact, we can remove this as well, because in the end, everything has to go back to the larger degree targets. Remember the following: C, A, B, C. C is a 5-wave move. Is a 5-wave move. Either impulsive or diagonal. Wave 1 and 2, wave 1 and 2 is complete. 1 and 2 is complete. If it's diagonal, there's weaker potential upside. So diagonal. Weaker potential upside. Still, however, very volatile though. Strong contender of the top is 0.618 and 1. 1 is generally more likely in Elliott wave theory, but as we saw before, 0.618 can also be the top, like in Carr. If, however, impulsive, then we'll see a stronger move. Impulsive. Historically, Gamestop levels for the third wave end at 1.618 and 2. But we can't ignore the strong resistance over here at this 240 level area. This 240 area will likely be some kind of consolidation or some kind of correction within this area. And wave 4 will likely be very long. It's just the nature of the fourth wave. Wave 5 over here will terminate at a minimum 1 extension level, and it can go higher. This would make up the larger wave 3. More information will be revealed as the price action reveals itself. So again, plan accordingly. I will end the video here. I don't know when my next video will be for GameStop, as I don't see GameStop going back down lower than $22 ever again. And $22 is over here, where wave 2 essentially ends at, or terminates at. If we break this, wave 2, we only have 2 scenarios. We are not in an impulsive move. We're not in an impulsive wave going up, and it's going to break even lower. Or wave 2 is a flat correction. But seeing the technicals in general, this level at $22 is not going to break. I do not think this will ever break again. And I can only see this going up. But hey, that's my bias. So, with that being said, good luck to you all, and I'll see you in the next video.